Hey guys, what's going on? It's the weekend. This is probably my first Sunday video I've posted in a couple months at this point, just because I've been traveling. I've been off for the summer and doing some things that have been away from my house, so haven't had a chance to really post anything. And I'm gonna try switching some things up, just kind of give some just investing advice basically. So before I get into it, make sure you like, subscribe, comment below. Trying to get to 700 subs by the end of this month. So if you hit that subscribe button, it's much appreciated. So basically I just want to talk about something like that comes up a lot, and some people DM me or PM me or whatever and say, hey, like, what do you think of these stocks? And I notice a lot of them are like really big name Wall Street brand or companies. So I just kind of want to dive a little deeper in and basically say how I look at things and what I do. And basically the headline is don't chase Wall Street. I feel like there's a couple reasons why you don't want to do this. So, what a lot of people do is they'll just Google or type in best stocks or best tech or biggest companies or best growth, just very generic searches. So really what happens is you have a lot of newer or inexperienced investors doing that. And then they'll buy, let's just say they buy Google, for example. Like I just was saying Google search, but let's say you bought the stock Google. So G-O-G, right? Google. So you bought this stock. The stock's right now at 52-week highs, right? So let's say you don't know what you're doing. Wall Street says, oh, Google's doing great. The return's awesome, this and that. It has a bright future. Like, yes, I mean, all that is true. They have a ton of cash on the balance sheet. They have a great team. They're a tech power. They're not going anywhere, right? Well, let's just say Wall Street and big money says, oh, well, it's at all-time highs. I don't see it growing as fast as what it's already had its run. It's already went up 30% in the past 3 months. And then they sell out. You bought in just based on this news. Oh, it's doing great. Stock's going up. And then, you put in, let's just say you put in $100. Just make it real simple. Next thing you know, it corrects, 15%. Then you panic. Then you're down to $85, right? So you're like, oh my gosh, this Wall Street says stock's doing great, it's at all-time highs, it's gonna keep going up. And then you catch yourself in a trap where you're like, and then you start panicking and all that, and then you wind up selling. Then you get a real bitter taste in your mouth saying, oh my God, well, Wall Street says the stock's gonna be great, this and that, So you just, basically what I'm saying is you gotta be very careful on what Wall Street says and what stocks are doing great. Because really, if the stock starts like running up, and just say you're at this point right here, like right here, people are going to take their profits and then it's going to go down. So if you buy at this point, you're probably going to get burned. So what you really want to do is when the stock has turmoil, you kind of want to buy like here, and just keep going, keep buying until it hits that bottom. And then when it goes up, do not buy. So you kind of got to train yourself exactly do the opposite of what your mind's telling you to do. It's kind of weird. You got to kind of train yourself to do that. But you also have to be very confident in the business and do your own research and understand what's going on, the market it's in, the management team. You got to look at the 10Qs. You got to look at the conference calls. You got to do a lot of stuff to feel confident buying. So, that's kind of how I look at it. Also, CNBC. This is another one that, really has, it's a great channel to watch and give you ideas, but a lot of times, you've analysts on there that are pushing something because their firm might be in it, or they want to try to convince people to buy. So you got to be careful with that. You got to do your own research, because a lot of times they do speak some truth, but they try, putting icing on top of the cake or buttering it up so it gets people excited to buy after they bought in. So you just have to be very careful. There's a lot of good information on CNBC and some good stocks they bring up and talk about. Personally, I like getting in the stocks before they start running up on CNBC. Like if CNBC is talking, like example, like this week they were talking about DoorDash. DoorDash just IPO'd this year. They're running like crazy. They said they're gonna have double-digit growth for the next 5 years, so the stock's going completely nuts right now. I personally like DoorDash. I don't own it, but I would never buy it right now with CNBC hyping it up and all these analysts saying it's a buy. That's really how you get burnt as a long-term investor. So that's kind of my point here. Like when stocks run, the second you see them go up like that, and then people start talking about it, Wall Street, CNBC, really if it runs up, you know, if you don't buy at the bottom port or nobody's talking about it, chances of you being successful doing this every single time are very slim. I mean, look at Bitcoin. Bitcoin had that big rally in 2017. People were buying at 17,000, 18,000, 19,000. Then it went down all the way to $3,000 again. And then it went up to 70,000 this year. And now it's down, it hit lows of 30,000. So if you bought at like 60, 70,000, you lost half your profits. And then you're going to sell out, panic, not know what you're doing. And then you're going to freak out and say, oh, it's, you know, the market's a scam. Like, no, it's not. You just didn't do your research and you were buying off hype. So that's kind of, you know, you got to really discipline yourself to understand when to buy. And then there's, you know, there's resources everywhere to figure that out. So it's not like you have to, I mean, there's no magic recipe. It's just putting in the time, researching companies, understanding things, and then understanding basically evaluations. So that goes into emotions. So the market's very emotional. And even when you type in like Wall Street, CNBC and all that stuff, it's funny because they're all long-term investors, most of them, but they all run on short-term emotions. Great example right now is with all the Chinese stocks and, you know, even like Win, which is something I'm in, you know, 50% of their revenue in Win comes from Macau, which is in China. So, you know, Wall Street freaks out and, you know, people are like, oh, you know, it's very emotional. You know, it's one of those things where, you know, those stocks right now are down anywhere from 20 to 50% just based on China saying they're going to crack down and stuff like that. So that's all short-term stuff. And yeah, well, that might be a bad example because that might be permanent or very long-term, but, you know, like Beyond Meat, I made a video on it, I believe Friday, that, you know, it's one of those stocks where analysts just made it overweight from neutral, but like the fundamentals didn't change. So if the stock's going down and analysts change their prediction, it's all short, most of it's short term. So that's when you should really be buying. You shouldn't be selling. So if you understand, you believe in the companies you're invested in, there's no reason to really sell out of them, in my opinion. So it's kind of worked for me in the, you know, in the years I've been investing. You know, the more you do it, you know, obviously the more you learn, the more you understand, just like anything else in life. You know, if you start riding a bike and you finally go off the training wheels and you can do it for the first time, and then, you know, you keep doing it, it's going to be second nature to you no matter what. So it's really the same thing, just like anything else. The more time you put in, the more time you'll understand, the more things you experience in the market, the more you learn. So it's really cool once you get into it. And if you're not, you know, if you haven't started investing, I highly recommend, I mean, if you're watching this video, you probably do, but, you know, it's just, these are like 4 main things that you need to train yourself to really, you know, understand and just get used to be successful. So that's all I got. If you guys like this video, I don't make many of these. Make sure you like and subscribe. I'm trying to get to 700 subs by the end of this month, and it's much appreciated. Peace.